Hey everyone, it's Dale here. In this video, I'd like to talk about 6 uncomfortable truths about order flow trading. And I think that everyone who is about to start order flow trading should know about these. So let's cut to the chase and let's start with the first one. Order flow is not ideal for beginners. What brokers and order flow gurus will tell you is that order flow will transform your trading, that it will allow you to decode the market and see the intentions of big trading institutions as if you were reading an open book. But the truth is that it won't be like that, at least not if you are a beginner. Because without experience, order flow will likely leave you overwhelmed just by the sheer amount of data and complexity that you'll see on your screen. You can think of it as if you are trying to read an advanced scientific paper without understanding the basics. It would just be confusing and not productive. So don't take me wrong, order flow is a great tool, but it is best used when you already understand the market and know what you want to look for. It's not a magic shortcut, but an advanced technique that requires a solid foundation. Now, the second uncomfortable truth is the truth about bid and ask. What everybody will tell you is that if you look at bid, which is this left side of the footprint, there are sellers, and that on ask, which is this side of the footprint, those are buyers. Right? Everybody tells you that. And this is why beginners think that order flow trading is easy. But it is not easy because this is just half of the truth. The complete truth is that on bid, there are not just aggressive sellers, but also passive buyers. And that on ask, there are not only aggressive buyers, but also passive sellers, which makes reading the order flow footprints way more difficult. But people don't usually tell you this, they just tell you one part of the story, which makes order flow look like a holy grail. So this is another uncomfortable truth that people selling their order flow software are telling us. And by the way, there is a way how to tell whether there is a buyer or seller on bid or buyer or seller on ask. But you need to read the context of the market, not just look at specific footprints. And that's why I said that in order to use the order flow, you need to be experienced and not a beginner. But if you really do want to learn order flow trading, you definitely can learn this, for example, from my order flow course, which is available on my website. It will take some time, but it will take you there. And believe me when I say that it will take you further than the other guys who are just saying that bid are sellers and ask are buyers, which to real traders, this is just a joke. So let's move forward. The third uncomfortable truth is that in order to trade with order flow, you need to trade a centralized market. Now, a centralized market, that's a market where all the trading instruments are traded at one central place. That's, for example, futures, indexes, or stocks. And on that one place, all those are traded and the order flow shows data from that one place. In other words, the order flow will show you all the transactions of all market participants. You don't miss anything. On the other hand, decentralized market, that's for example forex, on those markets, instruments are traded on many different places. That's why it's called decentralized. And in this case, order flow shows only part of all the transactions. And that's the problem. You know, like getting just part of the total volume would be fine, for example, when you are trading with volume profile strategies, which are more about getting the big picture. But with order flow, which is more about the detailed look, the decentralized markets are not really what I would recommend. And that's why I say that for successfully trading with the order flow, you need to use accurate data, which you can get only from centralized markets. So for example, if you want to use order flow to trade currencies, then you want to trade those on futures markets. So let's say you want to trade Euro futures or the Canadian dollar futures, but you don't trade them on forex, all right? Because you want data from centralized market. Now let's go for the next one. The uncomfortable truth number 4 is that the numbers that the order flow shows don't matter that much. You know, if you look at any order flow chart, then it is a very detailed heap of numbers, and it sort of compels traders to start digging in them, because they think that this must be the order flow trading, right? Digging deep into those numbers and the volumes that they see, and they think that by doing that, they can sort of decode the matrix. But if you do this, it will only lead to paralysis by analysis. Instead, I recommend focusing on a specific stuff which is hidden in all that noise, in all those numbers. This specific stuff you want to look for are, for example, heavy volume zones, huge orders, imbalances, failed auctions, deltas, and more. Let me show you. So what you see before you is a footprint chart of the Canadian dollar futures. It is a 5-minute chart, and in here, as you can see, there are a lot of numbers. But to me, as a trader, I'm not really interested on all the numbers. I'm interested in just a couple of things. I'm interested in heavy volume zones, like this one. I'm interested in stacked imbalances, like in those 3 nodes, that's this highlighted zone. I'm interested in failed auctions, like for example in here, this dotted line. I'm also interested in double heavy volume nodes, like those highlighted in yellow. I'm interested in deltas, those are the numbers below the footprints. And talking about the deltas, I'm not really interested in specific numbers here, I'm just interested whether the delta is negative or positive. There's not much more to it, but you just need to know what to look for, right? It's not reading every single number and trying to decode what is actually going on there. No, this is not order flow trading. As a trader, you need to know what to look for. This takes some experience. You can learn this, for example, from my course, but order flow is not about reading every single number which you can see on your screen. This is not how you decode what the big players are up to. This is not how to tell what the market will do. Now, the next uncomfortable truth is that order flow is not so good as your primary strategy. Now, this could be quite controversial, so you can take this as my own point of view rather than a general truth, but in my opinion and experience, order flow is best used around strong support or resistance zones, which you can find with something that will give you, let's say, a bigger picture. Could be price action, volume profile, VWAP, or some other trading strategy which will show you where big supports or resistances are. So after you identify those key zones, then you use order flow, but only as a secondary strategy. And you'll use it to confirm your trade, to manage your trade, and to get most out of your trade. But first, you need to identify that strong trading level around which you use the order flow. Now let me show you this example really quickly. Here is a 30-minute chart, and on that 30-minute chart I used a volume profile to identify a strong level. And that strong level was at the beginning of a heavy volume zone, which you can see in here. This is a heavy volume zone, which helped me identify this level, right? So the first step is using volume profile to identify a strong level. This is a 30-minute chart here. The next step, when the price goes towards that level and when it's close to the level, then you use order flow to look into that area for trade confirmation. So that's the second step. Let me show you. So this is my order flow layout, and let's just focus here because this is where I saw the biggest confirmation. Let me actually go full screen. And this is a delta, cumulative delta chart. It's part of the order flow software. And this is the level which I had here. This is a price chart, the price going towards that level. And at that same time, delta was dropping. And that was the confirmation on the order flow to actually enter that trade. As simple as that. In this case, it was pretty simple. Sometimes it's way more difficult, but in this case, it was straightforward because divergence like this is a beautiful confirmation for a trade entry. But the point is that first you identify a strong level using volume profile or price action or whatever, and only then you use the order flow, or in this case the delta, for the detailed look and for the trade entry confirmation, right? And if I switch back, then this was the outcome of the trade, right? Short from this level. Now, the last uncomfortable truth is the costs. In my experience, I don't think that there's avoiding paying for the software and for quality data. Those are two costs which you need to be okay with if you want to properly trade with order flow. What I have here is a little comparison of what the costs are. Regarding the software, the most popular is probably the TradingView platform, which is $600 per year, and this one includes order flow and also other indicators and data and platform fees and everything just in one bundle. But I need to add that the TradingView order flow is not really good. I mean, like, if you have their subscription already, then I recommend giving their order flow a try. Otherwise, I would look for something more professional. And that option could either be the NinjaTrader order flow or my order flow software. The NinjaTrader is $1,500 for a lifetime. This is not just for the order flow, but also for other indicators like volume profile, delta, VWAP, and more. And the other option would be getting my order flow software, which is usually $497 for a lifetime license, including order flow video course and other indicators like the volume profile indicators. Now, obviously, the internet is full of order flow software. You can just browse the internet and see what others have in store. The price will vary from hundreds to thousands of dollars, so the range is pretty big, but I'm pretty sure that you won't find a good free order flow indicator. So this is an initial cost which you need to be okay with, and then the other cost, as I was saying, is the data. You need high quality futures data, which if you get, for example, the CME exchange data, then it will be $140 per month. So that's the amount that you will need to pay if you want proper data. And I strongly recommend having proper data, because using order flow is all about having detailed data, right? So that's about the costs that are associated with the order flow trading. And that also wraps up this video, so I hope you guys liked it. The intention of the video wasn't to put you off or scare you of using the order flow, but rather show you the not so popular facts about the order flow trading. But I think that it's useful to know them before you start, so you are not surprised later. So that's about that. If you liked the video, then don't forget to like and subscribe. And if you want me to be your guide in the world of order flow trading, then what I recommend is visiting my website. It is trader-dale.com, and if you click trading course and tools, then it will take you right to this page where you can get my order flow pack, which is educational and indicator pack, specially designed for those who are interested in day trading with order flow. It includes an order flow video course, order flow software, and volume profile indicators. There's also a free tech support, which I think is especially needed with software as complex as the order flow software. Alright, so that's about that. Thanks for watching the video, and I'll be looking forward to seeing you next time. And until then, happy trading!